𝗵𝗃 has absolutely exploded in price over the last 7 days, rising over 69%. And even in the last 24 hours alone, the price has risen 10.5% yesterday, posting 44% gains. So it's got a lot of people asking, is 𝗵𝗃 back? Could 𝗵𝗃 potentially pull the run that it pulled just a month ago again in the month of June or July? And today I'm going to answer that question because I do believe from a metrics perspective, especially on chain, something here is brewing. But I also want to talk long term about my thesis for 𝗵𝗃. So do I actually believe in it? And next cycle, could it be the meme coin that actually outperforms Doge and 𝗕? Because if so, it could be something worth adding to your portfolio. And I'm going to get into some of the reasons why that may actually be the case here, and give you some of the logic, my thinking, and the metrics behind that. So without further ado, let's look at what has happened over the last week alone. If we go into the Banter bubbles, you can see 𝗵𝗃 is up 71.07%, posting some of the biggest gains in the entire crypto market. The next biggest gains come from a coin like Stacks and CFX. Obviously, Stacks is running off the back of the Bitcoin/Bitcoin ordinals SEC safe narrative that we spoke about last week. We did very well in that trade, by the way. So anyone that got in at around the 55 cent level, you'd be in some nice gains right now, 40-50%. So that's been a great one. But even so, with such a good trade on Stacks, 𝗵𝗃 still ended up outperforming Stacks. Now, very interestingly, one of the levels that I had historically marked out at the 0.8 level, I know there's a lot of decimals before, but let's just simplify it and call it 0.8. This level actually held really, really nicely for 𝗵𝗃. So we saw a pivot off the lows, a double retest of this 0.8 level, which corresponded in a 73% pump into range highs, which we are now actually flipping on the daily. So anyone that was kind of paying attention to this structure, you would have gotten some nice entries here. Remember, this was more of a spot entry zone. For me, at least, these are kind of my spot levels due to how 𝗵𝗃 fluctuates in terms of price. However, if you were, a leverage trading gambler and you opened up a trade here, and you set a stop below, well, price barely even ended up wicking below this level. And why is this level so important? Well, it's the first major level that 𝗵𝗃 hit resistance at during the last run when it went into price discovery. And it was also the level that held after the next pump when it had its first retest. So it was the first resistance level, and it was also the first support level for the SR flip for 𝗵𝗃 to make all-time highs. Typically, with a new coin that goes into price discovery, these levels end up being really significant, and that's why this support level played out. You might be asking me, oh, well, Miles, it's very well and good that you had the support level there. Did you buy? Honestly, the answer is no. I missed this. I faded it. I'm going to be completely honest. You guys know that, we made roughly a 10x on the run-up. I sold out, I think, for a 7x net profit. We also shorted. I know, Daniel actually won the trading comp from the short of the 𝗵𝗃 red wedge here, the breakdown. But if you're asking me to collect clout for this recent move, I didn't call it, although I had it on my chart, so I was actually kicking myself that I didn't back the charts, but I don't know what I was doing on the day of June 15th. Clearly not switched onto the market, but look, I want to say for those that were, you would have gotten this entry basically spot on. But obviously, we're here to answer whether this can have more legs, and what could potentially come next, and also what could come next cycle. We can dwell in the past as much as we want, but I prefer to focus on the future. A couple other key metrics that I'm seeing. The first metric that actually ran before price, and this is actually a good metric for you guys to take forward into your trading strategy, is actually the open interest. So if you go into a website like Coinalyze, you can see the open interest positions and the change in open interest corresponding with the changes in price. So if we go into the daily chart here, we'll see that open interest started to tick upwards, actually had a few pretty big wicks even before the really big move from 𝗵𝗃 came. So how can you use open interest in crypto? Well, if you go to a website like Coinalyze, use open interest to gauge the amount of change in the amount of open orders, so open contracts for shorts and sells in the market. If a coin is going up or is showing bullish momentum in tandem with an increase in open interest, that's often a signal that long positions are starting to build. Obviously, if a coin is showing, bearish momentum and you have a massive increase in open interest, that can be an indicator that you are getting people starting to short that coin. Now, to work out whether people are long or shorting, all you need to do is look up the long/short ratio on Binance's website, and you'll see exactly whether people are shorting or longing, but you should also be able to tell from the price. So open interest is a major indicator that I actually use to kind of try and spot new altcoin pumps. When I see a move in open interest, typically that will indicate that I should look into that coin. Doesn't necessarily mean buy, but it is something that can help us indicate what is strong in this market. And when Bitcoin moves, you want to be getting into the strong coins, not the weak coins, of course. One other indicator that started to tick upwards in the favor of 𝗵𝗵𝗃 prior to 𝗵𝗵𝗃 pumping in price was actually KyberSwap's ranking score. So KyberSwap just launched a new AI product. What it is it's basically an AI dashboard that uses machine learning in order to evaluate a coin's momentum, and it creates its own proprietary score. So it will rate a coin out of 0 to 100 with decimals all the way along as to how bearish or bullish that coin is in terms of momentum. But what it actually does is every 4 hours, the Kyber score resets based on the indicators that it takes into account. And we actually saw a slight uptick before the last leg of the pump yesterday when this started flipping bullish. So this was another decent indicator for 𝗵𝗃𝗃, and this is also a website that I use to help me evaluate strength in the market. So if you are interested in KyberAI, there is a link in the description. They're currently in beta, so not everyone has public access, but if you do use the link in the description and you sign up, you can get access to this early before anyone else. So I thought it was pretty cool. They also have other rankings for other things as well. But for 𝗵𝗃𝗃, this was a good indicator. I'll also show you some of the other things that they can do. Shows you all the key stats, shows you the types of trades. So it shows us here the total amounts of buys and sells. Once again, if you use this in tandem with open interest, that could give you an indicator as to whether people are building long or building short positions. And you can also view the change in trading volume here, which is quite interesting. Also, net flow to whale wallet. So that can show you if whales are accumulating. So a few pretty cool stats here that you can use to kind of start researching meme coins. Once again, link in the description to KyberAI if you want to add that to your research toolkit. Obviously, I also use websites like Coinalyze, Lunacrush, DeFi Llama, but that's another good one I've added because it's free. So it's been really awesome to get access to the beta there. All right, let's get into the kind of thesis here behind 𝗵𝗃𝗃. So at the end of the show, I'm going to talk about my immediate plans in terms of trading 𝗵𝗃𝗃, but now I want to zoom out a little bit and talk about 𝗵𝗃𝗃 more in the context of the next bull run and what it actually means for crypto and what it means for 𝗵𝗃𝗃. Could it overtake Doge? What is the go with 𝗵𝗃𝗃? What's my thoughts on 𝗵𝗃𝗃? Because during the last run, look, it was fueled by speculation. It was fueled by hype. It ran so quickly. We didn't really have time to sit back and evaluate the metrics. So now that the dust has settled, we've had a couple months or around a month to do fundamental research, research how 𝗵𝗃𝗃 responded in price to different market conditions, aka a liquidity tumble, which we saw after the meme coin rally. And now we have a much better picture of how the market actually responds and if it believes in this coin or whether it was short-term hype. And I do think that it's proven itself to some extent over the last month, and I'll show you why. The first thing I want to do is look at the metrics from the last run. So just to kind of contextualize how crazy things get with meme coins, look at the hourly transactions of buyers and sellers on the June analytics dashboard here. You had 2,400 sellers in a single day, 3,884 on-chain buyers. This isn't even including, centralized exchange buyers. So a crazy spike in the amount of buyers and sellers. Also, the 𝗵𝗃𝗃 price you'll see corresponded pretty much exactly with the amount of transactions. That's typically something you'll see, although sometimes, like in May, you'll actually see the amount of positions opening front run slightly the price. So we do see that sometimes. Like here, you'll see this big spike and then the price significantly increased. And here you saw big spikes and then the price dropped because there were a lot of people trying to actually short this trade. So sometimes it can be a leading indicator, but oftentimes it also can be a lagging indicator. So I wouldn't use this as a sole trading indicator, but it's just interesting to see just the magnitude of how crazy that hype was. And as a result of that hype, 122,000 people now hold 𝗵𝗃𝗃. So we actually did see a slight decline once the price started dropping, but by and large, the total number of holders did hold up above the 100,000 level quite strongly. So this is a sign that a lot of the community is just not really interested in selling this. They kind of just wanted to hold, join the 𝗵𝗃𝗃 fam and kind of chill. Maybe they bought into highs and now they're underwater. That's something else to consider. But, a lot of people just didn't sell all of their position and actually ended up holding some 𝗵𝗃𝗃. And you can see this on the charts as well with the total amount of token contract transfers. Although it did have a spike and stagnated for a while, it's also started to just uptick over the last few days. Funny because 𝗵𝗃𝗃's already, all right? So if we actually go and look at the chart, just because I found this really interesting, 𝗵𝗃 is only 180% from its highs. I know that's a lot. I say only. It's a shit ton. But still, I want to say only in the context of the transaction volume. It's minus 62% from its highs. But look at the difference in the total amount of transfers during its peak when it was up another 180% versus now. I mean, this is way more than 180% gain in terms of transfer amount. 391, that's almost over a 10x, right? You've got 83 trillion versus 391. What comes after trillion? Quadrillion transactions, right? That's a quadrillion. Yeah. No, million, billion, no, trillion versus, yeah, it's crazy. Transfer amount. Okay, that's also in the trillions. And then you can see the transfer count at 11,443 versus the transfer count at 1112, right? We got there in the end. So basically, that's a 10x in transfer count versus a 2x in price, all right? So that's, the metrics definitely suggest that although price is running, the total amount of transactions hasn't run in tandem with price. So it's roughly a 10x. And then you have your 4x on the total amount of contracts traded, just to clarify that. Also, one more thing is the total amount of transactions at 329K is also building nicely, but has significantly slowed if you look on DEX tools. So less transactions for similar pumps in price. What does that tell us? It tells us that the holders that are bullish on this are buying it more aggressively. And it also tells us that there is also a lot of leverage starting to enter the market. So players positioning themselves more aggressively, not only in terms of neutral spot value, but also in terms of the amount of risk they're willing to take on derivatives. And I think what happened is with Bitcoin pumping in price, the risk appetite for the market has slightly increased. Obviously, it's not as bullish as the initial 𝗵𝗃 run, but it also has resulted in some people taking on additional risk. It's not only 𝗵𝗃 that's running. We're seeing a few other meme coins starting to perform well. Obviously, nothing compared to 𝗵𝗃 though. So, all right. What's the dumb money thesis? This is kind of the crux of this video, and I'm going to make a really important point in a minute, which you can apply to all cryptocurrencies. But all right, there's a theory here. And to be honest, it's probably not the theory you want to hear if you're a hardworking, researching crypto soldier. Like if you spend all day in the trenches, getting data, researching fundamentals, you're probably not going to want to hear this. But oftentimes, the dumbest money in crypto makes the most money. And oftentimes, you try and outsmart yourself by paying all this attention to fundamentals, by doing all this research. And sometimes it just ends up that the dumb money ends up making the most money. Now, I'm not saying don't research, don't look up fundamentals, don't do on-chain analysis, blah, 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 because all that is a way for you to create an edge. But sometimes just not overcomplicating it and just accepting crypto loves memes and crypto loves buying into pumps can just be a valid way to make money in crypto. So I love using this chart, this example of this, crypto IQ Bell. You have all the dumb money that actually, makes money. Then you have all like the whales, like the really smart money, the institutions, they're making money. And then you have everyone in the middle. And I would say most of us are somewhere in the middle. Like not even I would say I'm in this top echelon. I would just put that category for, the top of the top fund managers and, the top whales, the traders that consistently post $1 million profits every month, of which I'm not one of them. So I wouldn't even put myself here. And I also wouldn't put most of you here. I would say most of us fall within this 14 to 34% percentile of IQ on the bell curve, which is your standard deviation. If anyone has done statistics, that's your standard bell curve. But it's kind of funny because these people, the dumb money, they often end up making the most on trades like 𝗵𝗃 because they see a shiny new meme coin and they ape in and they love it. So when the bull run comes back around and the market starts pumping, like you can outsmart yourself and really try and look for the L1s that are showing fundamental growth and the DEXs that are gaining traction. And, that's definitely going to work, but all that effort still might not outtrade the dumb money, which is going to go, ooh, bull run, me ape into 𝗵𝗃. Unfortunately, that's what often ends up happening. And that's why last cycle, if we look, Doge was basically the top performer during its run, and 𝗕𝗵 was also the top performer during its run. Now, are the pumps sustainable? No, because dumb money, although it loves to ape into crypto, it also loves to dump. It also loves to panic, and it also loves to sell. So what you'll see is this percentile of traders are much more prone to aping at the wrong time, but they're also much more prone to dumping when things start to get shaky. And that's why you see these huge retail-driven speculative hype bubbles from these meme coins. But it's also why if you can time it right, and if you can use metrics to trade these coins, I'm going to get into a couple strategies in a few minutes here, you can actually try and outsmart the dumb money. But you have to also think like the dumb money to understand what they're buying. I'm going to give you another example which applies to last week, in case you want a more recent example. Bitcoin had its BlackRock ETF announced that they were filing. So BlackRock announced they were filing for an ETF. A lot of other players came into the market. As soon as that announcement happened, there was a lot of people on Twitter saying, it's not approved yet, it's a government setup, it's just an SEC ploy, EDX was reported 12 months ago, it's only launching now, it's not relevant. Basically, it didn't matter. Any of your concerns, the price just pumped. Why? Because there were people that saw ETF news, BlackRock, me buy Bitcoin. And that's why the spot ratio of Bitcoin trades increased to its highest amount during that period. So sometimes just accepting that you're not the smartest person in the market, it can actually be a good thing, because sometimes you just need to follow the common trade. Because at the end of the day, the majority of market participants is made up of the common trade. Now, during a bear market, during tough liquidity conditions, like we have seen throughout periods of this year, it's difficult. It's very difficult to trade, and you do need a significant edge to try and make money. But in periods of bullishness, sometimes the dumbest logic ends up being the best logic. And this last week was a period, and still is, a period of bullishness where people are just buying off the BlackRock news. So it's another example of, potentially dumb money buying. Now, there are some really smart people that also use these principles, right? Because really smart people also just accept that they can't outsmart the market during certain periods. And that's kind of my reason why I'm not against meme coins. Because you guys know I love research. I love fundamentals. I love on-chain data. I love researching coins and meeting the teams and doing DeFi farming and all that stuff. I love it. But sometimes even I have to just sit back and accept, look, if there is a meme coin that is gaining hype, and I can use that as a proxy to make money, to stack more Bitcoin, to stack more ETH, to make more dollars, I'm going to use that thing. You best believe I'm going to use that coin. And that's, how we traded Pepe earlier in the year. Look, the other factor behind Pepe's strength is not just the dumb money thesis. It's also the strength of the community. And I think this shone through more so after the crash. After the crash than during the pump. Because during the pump, the strength of the community was blinded by sheer hype. You can't really gauge it. I mean, because 𝗕𝗵𝗄𝗃 and 𝗏𝗏𝗏 did the same thing, and SafeMoon did the same thing, and Doge did the same thing, and then, their communities contracted afterwards. What did we see from Pepe? Well, yes, we definitely saw a contraction, but we still saw some really strong metrics in terms of Twitter engagement, in terms of the amount of total followers, but also, even now, if we go into LunarCrush, which is a social data analytics tool, we can see that over the past few days, it's actually assumed the #1 alt rank. So the price pumps on Pepe, the social dominance pumps. Now, what the alt rank is it's a composition of social metrics, primarily taken from Twitter, in order to verify the current social strength of a coin. And Pepe, during this period, started to garner social strength as well. And we can also see that resulting in its weighted average, its engagement rank hitting #2, and its galaxy score hitting #1. So that's another thing that you can't really fade. So, all right, those are the metrics. What about Doge? So, obviously, Doge is the major meme coin. Pepe's now started to build a community. What trade ends up winning next bull run? That's a question I've been asking myself. Because if we can work out the meme coin that will perform better in a positive liquidity environment, then that's where you want to tailor more capital towards. I'm going to make the argument for Pepe and the argument for Doge as well, to try and be as neutral as possible. And then you can make up your decision based on how you want to split between the two if you're interested in meme coins. Before we get into that, if you do want to trade any of these, now I'm not recommending you ape or use crazy leverage or anything, just giving you a place to trade. If you are obviously in the right jurisdiction to trade on OKX, we do have a $30,000 sign-up bonus. So you can get up to $10,000 in a mystery box just for signing up. If you deposit more than $50, you get an additional $10,000 maximum. So you could win anywhere between 0 and 10,000, but there's a potential big reward. I say potential because it's like the lottery. The odds are unlikely, but still, it's there. And then you've got step 3, which is if you are a trader and you want to boost trading volume, you can get that other $10,000 rewards contract. So that's for a total $30,000 in rewards. Just for signing up or depositing or for trading. You can stack up to $30,000, depending on how big of a trader you are. So there's a link in the description. You have to use that link and click through this button in order to get access to the OKX competition. So what about Doge? All right. I firstly want to say my bullish thesis. Doge actually may end up being one of my biggest holdings at some point next cycle. Now, I'm not really stacking much. I like buying Doge spot on historical support on the weekly and the daily, just because I feel like it's one of the only tokens in the market that's actually been around since 2013 and hasn't gone away. So usually, new coins outperform old coins. But in the case of Doge, look at this. It was launched in December 6, 2013. That's actually prior to Tether. Probably not many of you guys know that Dogecoin is actually older than USDT. That is how long Doge has been around. And that is, I mean, it's already had 3 cycles essentially. So you can't really fade just how long it's been around. And almost on that reason alone, I don't think it's a bad hold for the next cycle. But of course, you also have your other factors as well. You know, the meme factor, the Elon factor. It's also proof of work. SEC compliant potentially, commodity potentially. Now, maybe Elon's in some hot water for shilling it, but in terms of Dogecoin itself, well, you could make the argument it's not as blatant as a security as some of these other O1s. That also goes in its favor from a relative strength perspective versus some of the SEC non-compliant coins. So that's also something to take note of. But what's the problem with Doge? All right, so I actually do like it. I don't mind it. The problem is I don't think the hype is all that it used to be with Elon. We can see here that during Elon's SNL performance, this is when Dogecoin pumped to its absolute highest level. What does a pump to its highest level mean? It means that the most people that bought Dogecoin happened at the top. I mean, that's just the law of physics when it comes to trading, right? The most buys happen at the top. So Elon had a lot of hype and got a lot of retail into this coin. I'm not saying he necessarily got them into it, but he was playing into the jokes, playing into the memes, did an SNL appearance that there was a lot of hype there. And since then, it's been down only. So I think there's 2 things happening here. The first thing that's happening is people have kind of gotten sick of the Elon thing. And the reason why they like PEPE is because it feels free. It feels just like an organic meme that kind of arose because PEPE has been a popular internet meme for quite some time. And now there's a coin. It feels very organic. Whereas the Dogecoin thing felt a little bit forced. And I think some people, maybe even you included, let me know in the comments, are a little bit annoyed with Elon pumping Doge and are kind of sick of it. And the impact of his tweets have less and less and less impact because people are just kind of sick of it now. The second factor, which is the most important factor of this entire video, is that because Dogecoin peaked during this crazy retail mania phase, 99.9, and you could say the same about most cryptos last bull run, 99.9% of holders are underwater. So many holders are underwater. So many retail normies were buying here. Probably you were buying here. Even I was buying Doge around this time. Like, so many retail normies were buying Dogecoin. They are all underwater. They are all bag holding. Most didn't sell. The ones that did and got out early and panicked actually ended up doing well. But there is a genuine concern with old coins in the market due to the underwater thesis. Now, I'm going to expand on this in future videos, but this is the most important concept when it comes to investing in old versus new coins. Old coins, so coins that pumped in the last bull runs, they have the most sell pressure. They have the most sell pressure because the majority of holders are underwater. If you want to just go to the Dogecoin chart, for example, or you can go to any chart. You can go to an AVAX chart. Literally, you could use any chart. I'll use AVAX as an example. Most people, actually, I want to use a coin with more historical data. Let's find Doge. I'll use Doge because it's got, obviously, it's been around since 2013, even before Tether. Binance only listed 2019 though. But most people are underwater. So the majority of people bought. I'll show you when they bought. They bought here. Then the next biggest amount bought here. And then the next biggest amount bought here. And so on and so forth. The majority of the holders bought the highest. And the majority of people bought much higher than it is today. That's just because, it's just maths. The majority of trading volume happened higher than the prices today. What does that mean? It means people are underwater. When you're underwater on a coin, think about the psychology of when that coin starts to pump. As it hits 10 cents and 20 cents and 30 cents and suddenly you break even at 50 cents, are you going to keep holding that coin that you've been underwater on for so long and now you finally have an opportunity to get out of? Maybe, but a lot of people, because they're underwater, by very virtue of the fact they bought too high, they're going to sell that coin. And that's the reason. And actually the fundamental reason why every cycle, the strongest performers are the new coins and not the old coins. Because new coins don't have barriers to how high they can go. There's no limit. There's no ceiling. Whereas when you have old coins that had previous all-time highs, there's always that ceiling because actual people have bought at those levels and actual people are going to sell when they reclaim those levels. And that's the fundamental reason why it happens, as well as the psychological factor of going into resistance. TA traders use historical resistance, whereas new coins, they have limited resistance because they haven't been around long enough. So that is the thesis behind why old coins actually end up performing better than new coins end up performing better than old coins. Now for Dogecoin, there's that counter argument. It's been around for a while. Unlike many of the other old coins, it's well known in the market. It may be a proof of work project, which means it's not SEC. It might be SEC compliant. So there's enough going for it that I'm not bearish on Doge at all. I'm actually, maybe I sway bullish on Doge. It doesn't mean I'm buying now, certainly not. But fundamentally, I actually don't hate Doge, unlike some other people. PEPE though, heading into next bull run, in my opinion, now this is only my opinion, by virtue of the underwater thesis, by virtue of the community and the meme being so strong, and people getting kind of tired of the Doge rhetoric, I think actually outperforms next bull run. That's a big call. I may be wrong on this, but I gotta make this call. I have to share my opinion. This is why I have the show. I think PEPE outperforms Doge, and for that reason, I will wait heavier PEPE versus Doge. But here's the counter thesis. 𝗕𝗏𝗏𝗃, one of the smartest guys on Twitter, said he's actually bearish on trading other meme coins versus Doge. He says there's two. There's Doge and there's everything else. He says he struggles to see a reason to be long any of the copycats when they're not the flavor of the month. 𝗕𝗵𝗄𝗃, 𝗵𝗏𝗃𝗃, etc. I get this logic. He says they're all going to zero. I get this logic. But I think he's not taking into account the underwater thesis on 𝗕𝗵, especially 𝗕𝗵𝗃. Even I'm actually up on 𝗴𝗃, but I'm underwater from my highs. I would definitely exit if I made 20% of my position. Because even I fall into that category of people that actually want to reclaim something from these trades. And if I'm feeling that and I bought relatively low, imagine how you're feeling if you bought it much higher. And the same thing goes with Doge. With PEPE, not as many people are down. Like if you actually look at the PEPE chart, since it only hit the those highs of 449, okay, it's relatively high compared to now. It's 180% move upwards. It's still not crazy. It's not a 10x. It's not a 20x. It's much more achievable, and there's less resistance in this area because of that. And because the percentage gains are less, people are more willing to wait out. Because a 2x is a lot less daunting than a 10x, right? So that's another factor there as well. So although I get 𝗕𝗏𝗏𝗃's counter thesis, here he may end up being right. I'm going to challenge him here. And I'm going to go against him. I'm going to say, I think the PEPE community might just have a better meme on their hands than Doge. I think the Elon meme it might still be popular next cycle, but I don't know if it's as popular. And for that reason, with PEPE being a lower market cap, at some point I see it outperforming. Now, I don't think it'll hit the market cap of Doge, but let's just see if it did. How high could it go? Let's just play a fun experiment. I don't think it will, but let's just, because I just think Doge has enough listings. I think it has enough history. I think it has enough of a community to still be a bigger market cap, but I think the gap will close. And that's just what I think. But let's actually see what the gap is now, and let's play some games. Let's see how I could go. PEPE, 644 mil. Doge, 9 bill. Much, much, much bigger. So if PEPE were to be the same market cap as Doge on a relative basis, it would have to 14x. So if PEPE caught up to Doge, it would have to 14x. That's the discrepancy at the moment in market caps. Now, if we look at Doge's all-time high, which was crazy, almost at the dollar level, 60, 70 cents, if PEPE hit Doge's all-time high in terms of market cap, and we can view it here, we can go to market cap, and then we can go to max, and we can see it's roughly 100 bill, 80 bill. If PEPE hit a market cap of 80 bill, that's a 126x from current levels. So if you want to talk about ultimate ceilings, now I don't think we can recreate. I don't think we can recreate the liquidity conditions of last cycle. It was fucking crazy, absolutely crazy and unregulated and bonkers. So I don't think it's getting here. But I'm just telling you, if you want a ceiling, because I know it's fun to do these experiments, the potential ceiling here at Doge's last all-time high is 126x for PEPE. That is your best case performance. 0.0001% chance of happening. Probably more than that, actually. Probably, sub 1%. Maybe even it is around 1%, I would say, which means you would have an EV edge on this trade. But, it's still definitely less than 2%, in my opinion, if I have to give a probability to it. But if it did, that is the kind of multiple you're looking at. Interesting. But even if it just got to Doge, it's a 14x. So that's very interesting as well. So would I buy it? Let's answer this question. Would I buy it? How am I trading it? What's my plan with PEPE? All right. So that's my thesis. You've heard my bull case, the underwater thesis, the dumb money thesis. You've heard some of the reasons why I actually think PEPE could outperform versus Doge next cycle. And I don't think it's just a temporary meme. You've also heard the thesis against it, 𝗕𝗏𝗏𝗃's thesis on Doge swallowing up liquidity from the others because the others don't maintain traction. They don't maintain seasonality long term. So those are the theories. But how would I buy PEPE? Okay, let's talk about the trading aspect first. From a trading perspective, it is flipping a pretty key level. I don't know. So look at this. It's just starting to have a daily candle close above. If you want to play this support buy on the 14.6 level, that could be a trading level. So that's probably your next trading level. It's your retest of this region. Be aware it can wick below. If it does, something like this could be good to actually buy it on the retest before it reclaims. So maybe you can put in a little bit of capital here, but then wait to see if it deviates. If it does, you want to buy on the reclamation. And I would trade that on the 4-hourly, not the daily, by the way. I would trade that on the 4-hourly, not the daily. It depends how long you're holding this for, but typically the daily chart is your momentum indicator with your historical levels, and then your 4-hourly, 1-hourly is going to be your entries because it's shorter time frame if you're trading leverage. If you're trading spot, then this is the best zone, but we've just missed this zone. So if we do have a strong reaction in this area, you could accumulate spot here. What I'm concerned about, though, I'm very concerned that liquidity conditions worsen in Q3. This is my thesis on the general market. And in those conditions, you'll see meme coins and altcoins get hit, and then you'll get better opportunities to buy. So the entire bull run thesis that I outlined that could potentially occur, I don't know if that occurs from this level. I mean, I would prefer to just buy around this area. And this is a whole zone that you can kind of keep on your charts and monitor over a few months that you could potentially buy out. Because I won't be greedy when it comes to long-term buys. Short-term buys, much happier to open a long on a retested mid-range support. We know this is a very key level because of how it's reacted historically in this area. But that is simply a trade. So that is your next long zone for the traders. For the long-term guys, I don't know about buying here. I'm completely skeptical of buying here. That's just my opinion. Not financial advice, of course. That's just how I'm not buying here personally. Long-term. Trade, though, retest, confirmation, maybe deviation below, and a reclaim definitely could be a decent buy. And then looking at that's a trade, though. And then looking at the major support, this is probably your much better long-term zone. But you could even make the argument that on huge PEPE dips, on huge days of capitulation, like this and this and this, on these red days, that can be an opportunity to DCA in. If you have the thesis that next cycle, PEPE is going to be a strong performer, then maybe you don't even want to time it too much. And maybe you just want to have the rule, any day PEPE drops 20%, I'll just add a little bit, and I'll just add a little bit. And I'm happy to catch a falling knife because I have enough stable coins, and I'm just going to DCA in. Treat it like a Solana bag or another bag that you hold, Ethereum or Bitcoin. You could treat it like that, and I actually don't think it's terrible. Out of all the coins in the market, I don't mind DCAing into this, to be honest. I don't mind it. I really don't. Just because I like memes. The meme factor is strong. In a bull run, we know they perform. And there's a lot worse shit to hold than PEPE, in my opinion. It might sound crazy because a few weeks ago it was looking risky, but just how it's performed in this period, how the holders have held up, how we've seen price action actually obey trend really well, that's been positive for me. And the thing you have to remember about meme coins is that they actually respect trends really well. So unlike other coins that are easily manipulated, and yes, this market is manipulated, a coin like this actually respects trend. It's quite odd, but it's not, because you got to think about it. People love trading memes. If everyone's looking at the same levels, then the levels actually end up kind of becoming self-fulfilling prophecies. By the way, I just want to mention, if I suddenly end the stream, if it just ends, it's because they're doing construction on my house. So if it just does end, let's see. Josh, if I do cut off, I think just end the stream because I've gotten through the majority now. But yeah, just letting you guys know. I do have an important market update to give you, though, on Bitcoin and stuff. But if I do end abruptly, I apologize. Just wanted to state that really quick so you're not shocked. But I think we'll be good. I think we'll be good. So yeah, in terms of the PEPE trade, it does respect levels quite well. But for me, long term, I think you could go in with two theses. One, trying to DCA as close to support as possible. Or two, just trying to DCA on super red days. You can do those strategies for long term, and for short term, you can try trading. You guys know we could potentially get a retest of this level. I probably wouldn't buy now because we've just pumped. Yes, we've broken out, but you only want to either trade breakouts or retests. You don't want to trade when you're in no man's land. I'll actually show you the 1 hourly time frame. We started developing this wedge after the show yesterday. I drew this when I was doing my TA. I usually TA for like an hour after the show. And I actually saw this breakout, retest, deviation below, and then we held on the 1 hourly. So this kind of pattern, if you guys want to take a note of this, on PEPE, sometimes plays out. When I say sometimes, it happens a lot. If we go back to the last run, look how often this happened. You had the wedge breakout. This was a failed breakout, but we bounced off support. Then you had another wedge break down. Pepe loves these wedge patterns. And in the entire run-up, it was one big wedge. Look at this, how it traded. It chopped sideways, and then it had the breakout, and then it had the bounce of horizontal. So Pepe loves making these bull flags. And it also made a bear flag. It just loves these flags. It's kind of how it's traded. Flag, flag, flag. It's come down. It's ranged for quite some time. It broke down on horizontal support. It bounced on support. And then it made another flag after it bounced off the 200 MA. So, yeah. So I think you guys understand my trade plan now. I think you understand my thesis. What do you think? I want you to answer now. In the comments below, what do you think of Pepe? Yes or no? Yes is if you like it for the next bull run. No is if you don't like it. Genuinely curious here. Let me know in the comments. Let's see who likes it and who doesn't. And I totally get the bearish thesis as well. I don't hate it at all. I'm not a 𝗵𝗃𝗄𝗃𝗃𝗃. I don't have max. It's not my max conviction coin. I'm a bit of an Ethereum maxi. I'll probably argue about that, but I won't die on this hill. But I would say yes. I would lean towards yes if you want me to answer. Someone said yes. Someone said yes and no. Okay, I totally get it because there's reasons for and against it. Oscar says yes. Mike says yes. The workshop prefers 𝗴𝗧𝗿𝗃. Interesting. Keep letting me know in the comments. Someone says Doge all the way. All right, so you're with 𝗕𝗃𝗃𝗏. Maybe I should tweet 𝗕𝗃𝗃𝗏 and bet. No, I can't. He probably outsizes me the fuck out. He probably has. Yeah, he'll probably outsize me. Even if I did like a $10,000 bet with him, he'd probably be like, make it $1 million. And I'd be like, fuck. He'll probably outsize me. Yes, no. Yes, I'm in. No. Only risk capital. Yeah, of course. When it comes to meme coins, have to make this clear. Only risk capital you can afford to lose. Please. I mean, that's crypto in general, but especially when it comes to memes, right? You don't want to treat it like Ethereum. Like if you have $100,000 in Ethereum, you would want less than 2,000 in Pepe. Like that's the kind of ratios I'm talking. Maybe you could go 5% versus ETH, 10% if you're the biggest degen ever, but anything more than that is getting risky. And look, if you are trying to moonshot 100x portfolio next cycle, well, maybe this is the only way to do it. But it is risky. It's very risky, and I personally wouldn't advise that strategy. I want to quickly talk about the market for a second. Yesterday's show was my big market update, by the way. If you want my full comprehensive market update, watch yesterday's show. It's on the Banter homepage, Miles show. I gave you a whole update on BlackRock, what's happening, including when to buy altcoins. I ran through my entire thesis on when I'm going heavy on alts. Entire thesis. Not going to repeat it today for the ones that watched yesterday. If you do want to watch that, watch yesterday. I want to give you an update today, right now, based on what I'm seeing, because some stuff did happen overnight. Bitcoin rejected off the 30K level. Quite a strong rejection, two bearish candles, but it is showing strength. If you're in the bullish camp here, the more you keep knocking on the 30K level, the higher chance it has of breaking. Because what we saw last time was we knocked at 30, we knocked at 30, we knocked at 30, we knocked at 30, and it took a month, and eventually it just broke. All right? Now, it didn't have the strength. It ended up being a 5% move, and then it came down, and it ended up actually being a resistance level for the next leg down to 26. But history shows us when we knock at a level for long enough, we break it. It has to happen soon. So for Bitcoin USD, if you're a bull, you really want to see this level break soon. You probably want to see a couple more tests. You don't want to see us break structure. If we go into the hourly chart, you'll see this much clearer. You don't want us to break horizontal structure at this level here. You kind of want to maintain this mini zone to kind of form the strength for the next push up. What could happen is, yes, you could break down and test 28.9 again. I think Kyle had a theory similar to that, where we would actually get that wick down to 28. You can look at his chart on his show, but it was similar to this, I believe, from memory. He thinks we're going to get something like this, a little bit of a dip. Actually, I'm going to get his exact chart. Kyle Dupes. So I'm not quoting him wrong. I don't want to chuck him under the bus here, but yeah, he showed that pretty much as well, except, okay, he wasn't as low. He's on the 15-minute chart. So that would have already played out by now. But he expected like a little bit of a dip and then us to come back up. What ended up happening? 19.5. Did we get there? I think we almost got there. I think we almost did get there. I think we did have a dip. I'm actually going to go into the 15-minute chart and just see whether Kyle was right. So 15-minute chart, 19.6, 23rd June. 15-minute chart, 22nd 2nd June. Okay, so it happened. It did happen after. Happened slightly later. Arranged and then ended up dropping. So he was right. We did have a slight pullback. So well done, Kyle. Not this bigger one that I'm talking about, but that would be kind of your more bearish scenario for breaking 30. It can still happen. You can still see a retest of this horizontal at 29K, and then we can push up towards 30. Why can this happen? Well, that's exactly what happened last time, right? Look at this. We pushed up, then we had a big rejection back down to 26.5, and then we pushed up again. So this does happen with Bitcoin. It's not uncommon that you see rejections and then you see reversals. If we do get this rejection here, a strong rejection, that would actually, for me, be a buy zone, especially on some alts that get smacked. A buy zone, hoping for a bounce back into 30, and then I would take profits at 30. So would I long now? No, because this isn't a clean break. If you get a clean break and we hold on the daily, yes. I think you can long. Keeping in mind the fact that we're heading into a resistance level of 32, it's probably only going to be a 6% move, but on the strong alts, you might get, especially PEPE, which I would call strong alt right now, you might get 20, 30% on that. So if we do break, yes, the long scenario is on, but for now, this is looking like a potential rejection zone, so I wouldn't long here. Not being stupid. And the other thing to note, which actually could go towards the camp of us getting a weekend sell-off for Bitcoin, which could correspond with a rejection and a retest of that 28.9 zone, is the fact that the NASDAQ is now starting to cool off a bit. So it's not massively cooling off because this daily red candle did get bought up quite, aggressively. But what we have seen is at least the momentum has kind of stopped a little bit here. Whether this reclaims is super important, but if the NASDAQ starts dropping, then I do think Bitcoin follows. I think it can hold up relative to the NASDAQ for a few days. The BlackRock narrative is super strong. The ETF narrative is super strong. I don't think it trades like 1-to-1 beta with the NASDAQ. But definitely, I think you could get a pullback if the NASDAQ corrects. And then the other thing to note is that gold sold off. A lot of people view Bitcoin in the same camp as gold as an inflation hedge. I don't yet. But interesting to note that gold actually did have a sell-off. So this is likely because people are expecting interest rates to continue to drop and inflation coming down, heading into that lesser inflationary environment, a deflationary environment, potentially in the future. The need for an inflation hedge in the immediate term may not be as prevalent, and I think that's why we've seen a sell-off. But gold in general, for me, is always a good investment, in my opinion, just because there's going to be times of economic turbulence where people flock to gold, and hopefully one day that becomes Bitcoin as well. So because we've seen a little bit of a gold sell-off and what it looks to be a triple top, and because we've seen a bit of a NASDAQ sell-off, hasn't been too strong yet, but the S&P did have a stronger sell-off. Maybe just be wary of a little pullback here for Bitcoin heading into the weekend. Weekend trading is always weird as well. So I'd say Friday is your last day to kind of start trading. If you're a day trader on the hourly, 4 hourly, and then heading into the weekend, I would kind of try and not be too aggressive with my positions. If you do want to trade gold or Bitcoin or anything, even commodities, Forex, etc., you can do so on Prime XBT. So they do have gold. They also have Bitcoin. They have many, like you can see gold here, 1914. You can trade this. You can trade Bitcoin. You can trade many alts. You can't trade PEPE. That's on OKX. But if you want to trade anything else, commodities, Forex, etc., there's a link to Prime XBT in the description. And you will also get quite a nice deposit bonus, which is 7% up to $7,000. Or you can get a 25% discount on commission. So if you are a regular trader and you want to save on commissions, we have the 25% off. You can choose which one you want using the link in the description. But that is for the guys that want to trade over there. Got to quickly look through just for the last minute here, some questions that I'm seeing. Let's see what people think. Let's do some responses just for the last couple minutes here. All right, let's see. Okay, a few people do like Doge. Some people agree. Some people like. Some don't. Pretty split. I'd say most of you are more in the bullish camp, though. Someone says he likes Baby Pepe. I don't know, bro. I think the logic for these other memes, that is a complete casino. I think memes are very self-fulfilling prophecy type coins in the sense that once they gain strength and hold strength and build up a big enough community, they become relatively resistant, like what we've seen with Doge since 2013. But to get to that level, to be a SHIB and a Doge, it takes a lot of trial and error. It takes 10,000 meme coins to go to zero to find your SHIBs and your Doges and your Flockies and maybe your PEPEs. PEPE is giving me a bit of conviction that maybe it's going to be one of these coins that can actually hold on the meme coin rankings due to what I've seen metrics wise during this drop. But most other meme coins like the baby PEPEs, the 𝗲𝗏𝗃𝗧 you guys are mentioning, they can be amazing trades, but they are gambles because they haven't been around long enough. They don't have the communities that have been around long enough. They don't have the same strength, the same relative strength even, especially during declines to justify that thesis for me. Someone said Doge is done. Yeah, I don't think it hits its all-time high again, if I had to bet. Car likes PEPE also. I know Fred also likes PEPE. There's a few of us. I don't know whether we've just seen the last pump and we want to just relive, that 10x feeling again. I think Hustle made a 17x. Absolutely insane. But either way, yeah, I think there's genuine logic here. You want to hear my point on BSV? What is BSV? BSV, Bitcoin. I don't know it. Sorry, bro. Should I know what this is? Blockchain. I feel like I know what this is, but I've just forgotten. Global infrastructure on the Bitcoin blockchain. Fast. Is it okay? So is it like stacks? Oh, I'm bullish on ordinals. 100% bullish on ordinals. But I want to know exactly what this is. What makes it unique? Bitcoin now, primary functions, scalable, usable blockchain platform for efficient payments. Government use. Is it smart contracts? It has dApps, so it must be smart contracts. Interesting. How is the relative strength? Because theoretically, it should be performing well, right? Stacks is performing well. And other ordinal plays are performing well. So let's look at BSV. Let's see if it has relative strength versus, let's say on OKX versus PERP USD. Interested to see here. No, it's showing terrible strength. Well, that's not a good sign. That's not a good sign at all because this is a strong narrative. But I am on the weekly, so it's probably pivoted pretty strongly off lows, right? Yeah, it has. But still, it looks terrible. So I would, to buy something like this long term, I don't know much about it, right? It's still up 75%. But due to this huge wick, since I don't know much about it, I would look purely from a fundamental perspective and tell you that I would at least want to see some of the lows reclaimed, namely this level. Because that is really where the bleeding started. I'm going to make this a lot bigger so you can see. That's really where the bleeding started, this 43 level. So, from a long-term perspective, if you can reclaim, then that can be a good level potentially. But unless you reclaim that, then you're kind of just catching a falling knife because this is still lower lows. It's still lower highs. And although this is a pump, if you draw a channel in, this could just be pumping back into the channel and then get rejected to the bottom of the channel. So that's why I don't really like trading coins that look like that. But yeah, fundamentally could be okay. And if you're a fundamental trader, you might want to DCA, but I don't know personally about it. You're talking about Binance. You pick SHIB. This year you'll choose PEPE. Good luck. Good luck. All right, I'm going to head off now before they switch my internet off. But happy we got through the stream, and I think it was a good stream. And hopefully you guys, that gets you thinking about not just PEPE, but also some of this logic. The dumb money theory and the new versus old coins theory, it sounds so simple, but it actually can be applied to like most coins in crypto, especially the old versus new coins theory. If you can really nail that and understand it, and I urge you to do some research, look at historical market caps from 2017 to now, look at the coins that perform in each cycle, you'll notice a clear trend. The new shiny objects perform better, not just because people like shiny objects, but because people really don't like being underwater. And when they are, that puts a lot of sell pressure on tokens. So I think that logic can actually be a bit of alpha for you guys going forward. But if you guys did enjoy this show, smash the like button. All the links are in the description if you want to trade on OKX or PrimeXBT, or use KyberSwap for some of your bullish or bearish Kyber score indicators. And until the next one, I will see you on the weekend for a show on how to use Google Bard in order to become a better investor and trader to find altcoins. I'll see you in the next video. Peace out.